Welcome to our session on seamless global transfers, trends and opportunities in cross-border payments. As Todd said, my name is Joanne Strobel. I am head of international payment products at BNY, and I am super excited to be here on this exciting topic with this fantastic panel. So today we're going to explore how the market is evolving across always-on payments and instant payments, ISO 20022, tokenization, fintech-led disruption, as well as the G20 roadmap, and importantly, how all of these things impact product strategy, commercialization, and client development. So, without further ado, I am going to introduce the panel that is exploring these exciting topics with me. So today we have joining us Michael Knorr. Michael leads the CHIPS product management at the clearinghouse, and he is driving strategy and development for this systemically important payment system. His expertise spans domestic and cross-border payments, high-value payments across leadership roles at Wells Fargo and Citibank. Michael also actively contributes to the industry in multiple different industry groups. Some examples of those are ISO 20022 Observer and Market Practice Group, the High Value Payment Plus Working Group, Payment Market Practice Group, and the CPMI Cross-Border Payment Interoperability Group, just to name a few. I know Michael's very involved, so thank you for joining us, Michael. Next, we have Tom Simpson. Tom is the Global Head of Currency Clearing in North America and the North America Regional Clearing Head for Cross-Border Payments at Global Payments Solutions and HSBC. Tom leads product strategy and execution globally for HSBC's currency clearing products within the global payment solution space, as well as North America cross-border payments proposition. Prior to joining HSBC, Tom held leadership roles across transformation, product, and sales roles at Morgan Stanley and Citibank. So welcome, Tom. And then rounding up our experts here today, we have Anupam Sinha. Anupam is the North American head of payments within Citibank's services business. He's responsible for formulating and executing product strategy across all payment products, including wires, ACH, cross-border payments, commercial cards, and acquiring for the Americas. That's a mouthful. That's a lot to do. And he is also the global head of commercial bank payments within Citi's services business. Prior to his current role, he served as the global head of domestic payments and receivables, where he was responsible for driving the growth agenda and strategy for the businesses globally, including Citi's direct access to 250 clearinghouses, ACH, and wire systems. So welcome. Very excited to have this discussion with such an expert panel. So gentlemen, as you know, cross-border payments are being reshaped by several forces. So it reminds me a bit of that movie, Everything Everywhere All at Once, because there's so many things happening right now. Such an exciting time and such a great topic to be discussing. So some of the things that are changing are customer expectation and moving to real-time, always-on experiences. Market infrastructures are being modernized with the likes of ISO 20022, which is also improving data quality and exposing some data improvement perspectives that we can have, and we'll talk a bit about. At the same time, though, we also see stablecoins, tokenized deposits, and programmable money expanding the discussion beyond simply improving existing rails. And then finally, we have the G20 roadmap driving the industry forward around speed, cost, accessibility, and transparency. So with all of these things happening, it's a very exciting time, as I always say for the last 70 years, to be in payments, but it's even more everything, everywhere, all at once. So with that in mind, we're going to jump right in, and we're going to move to you, Michael, with our very first question. So from as the clearing systems and commercial money movement shift from real-time, always-on models, what does this mean for the cross-border payment operating model?
Yeah, thanks, Joanne, and great to see everybody again today, and all that interest in payments. I think that's really amazing. And yeah, we heard about G20, right? And for a number of years, we've been working on how to make payments faster, right? But that's only one aspect. As we now look at, okay, how do we now extend settlement windows that has and the business day has obviously other practical considerations, right, that we need to be aware of. And many market infrastructures, here also, at CHIPS, we're working actually on that, right? How can we expand our own operating day, add additional settlement days to really work towards, right? The seamless 24/7 settlement model eventually. But it's not just around, just extending the day. I think there are a lot of you here, but that is part of our panel here. A lot of consideration around what does it mean for intraday liquidity management, right? For example, when basically we don't really have any proper end of day anymore, right? There are a lot of practical considerations we all need to continue to discuss, definitely in these meetings. If we think about it, a lot of the stuff we do, right, from a banking side, or us, right, from a market infrastructure, built around traditional business days and cutoffs, right? And if we move more towards 24/7, then how they're supposed to be, what defines actually then the business day in the future? And that's sort of heavily ingrained, right, in our backend systems that we have today. Also how we operate and from an implementation perspective, right? Meaning software releases and so forth, the testing we do, it depends on having certain days off. So we can make software upgrades and do sort of market testing, and you all participate in these things, right? So that's definitely an area that would be impacted by that. We will obviously need to figure out, right, how to improve sort of these processes around that. So, heavily, obviously, on the technology side, further investments to that, right? Also, if the business day sort of changes or goes away, but still, right? I mean, the sun still, or the sun still sets, right, and rises and sets, and hence everybody has a regular business day, local business day. So maybe as market infrastructures, we need to adapt to that and run multiple local business days. Definitely as a global market infrastructure, for example, like chips and probably Fedwire, right? Because the dollar is still running over 50%, right, of the global economy. So we probably got to adapt to those needs, and maybe look at how do we run multiple settlement sessions during the day. So it's definitely something we need to worry about. Last but not least, probably we'll hear more about that from my colleagues around intraday liquidity management, funding strategies, and the new controls, right, that are necessary in that space.
Thank you, Michael. So redefining the operational business day. It's be interested, Anupam, to get your perspective on what you also think that means from an operating model perspective with the always-on instant payments.
Sure, Joanne. And just adding to what Michael has said, and the whole redefining what your business day looks like. If you look at historically, cross-border payment was reliant on the wires network globally. It was, challenges dealing on the originating payment side, challenge dealing with the destination side, and the FX in between. As the world moves towards 24/7 real-time, we expect a lot of flows becoming 24/7 real-time, and as the wires network here in US, Fedwire chips, moves to as close as possible to 24/7. We think there is a significant amount of operating model re-engineering that we have to do, and we've done some of that for our domestic real-time flows. But we would expect a lot of transactions moving to the real-time payment schemes in the countries using instant payments or RTP or FedNow, etc. So we'll see a lot of that. Now, as that shift happens, we would also see some of our clients already doing that, and some of our bank clients doing that, which is shift towards the use of API initiation and having API first strategy around ensuring that they're able to pretty much real-time send those transactions from an API perspective. We expect a lot of analytics, and again, AI is driving a lot of that from an enabler perspective, but we expect a lot of analytics to happen from a cross-border payment perspective. And then finally, as you move towards a real-time world, as we look at creating those end of days, etc., or having no cutoffs time at all, we'll have to significantly move towards automated process. Today there could be a cross-border payment where there's a repair that's done, there are some regulatory obligations that we need to look at, etc. As much as possible, we are at Citi we're already doing that. As much as possible, everything has to be automated because real time 24/7 and manual processes don't go hand in hand. So we are seeing a significant amount of shift from our operating model perspective as we serve our clients from a cross-border standpoint to make sure it's as automated as possible.
Yeah, thank you. I love that perspective. Real time and manual processes don't go hand in hand. So, I mean, I'm going to stick with you on the same topic, Anupam, and thinking about that, right? And the continuation of the shift, and that's the operating model. And as Michael said, redefining the operating day. What does that mean to liquidity? Whether it's managing liquidity or managing intraday liquidity, treasury, how does that all work in a always on, constantly operating model?
That's a very good question. In fact, that's been something that we've been grappling with over a number of years. The amount of time we are now spending with our treasury team, we've never done that before. There is a pool that you've got your end of day and that moves on to the next day. Now you need to pretty much predict your use of liquidity intraday. So I would say huge amount of work with our treasury team in terms of us educating them and they educating them of what processes they have and the challenges that they're dealing with. The other thing that's absolutely critical is creating real-time visibility. Because if you don't know what money is being used where, that's going to be a big challenge. So we're working very closely with our treasury partners to make sure that we have as far as possible, as accurate as possible visibility of our need of liquidity. The third thing that we are looking at, and again, AI is being a big enabler there, is predicting the forecasting, leveraging AI, because that's absolutely critical. You may have days you would have the Cyber Monday where you suddenly peak and your average is not going to help and your payments will come to a standstill. So we're working with leveraging AI to start predicting those events and those days and those scenarios as well. Payment control is going to be absolutely critical in this new world. And we are looking at how do we ensure that controls are, again, going hand in hand with the speed with which the money is moving. The last thing I would say, Joanne, is digital asset and how that is changing the world. We're creating liquidity pools which are driven by use of the digital asset, where we are looking at, for example, City Token service, where money is moving from New York to Singapore real time, and we have the liquidity outside of the dollar clearing hours as well. So again, a huge amount of work with our treasury partners. It's never going to be perfect. In the real-time world, you have new challenges every day. And the closer you are to the treasury team and responding to those challenges real-time is going to be absolutely critical.
Yeah, thank you. I mean, it really seems like the speed and the always on is really spurring a lot of other innovation as well, as you mentioned, right? Making sure your data is right and then leveraging AI to help that always on operating model, as well as tokenization. So thank you for those examples. So Tom, I'm coming to you next. So as client expectation for speed increases, where does the need for controls and reducing friction end to end become the most difficult to balance?
Sure, I think payments controls obviously really important. I think our clients, having been exposed to domestic real-time payment schemes, they look at the cross-border payments model and say, okay, you can settle a payment in seconds in country. We have the same expectation for transactions that are moving cross-border. Fair enough to have that expectation. The reality is, though, there's obviously a lot of different checks that happen in a cross-border payment space that you won't necessarily see in the domestic payment processing landscape. So the ones that come to mind, obviously, sanction screening, payment repair, as Anupam mentioned, liquidity, and then also fraud checks as well. So I don't think any bank is willing to give up the regulatory obligations they have to screen payments, even for faster cross-border payments as they evolve. But the banks do need to react to be able to process and manage and disposition those regulatory checks with better and better technology. So we're seeing like contextual screening models and increasingly exploration in generative AI to be able to manage this process. So we want to reduce as much as possible false positive hits. So not having transactions stop any longer than they need to for screening. just because there's a word in a certain field that is, is potentially flagging for sanctions. At HSBC, we've implemented some contextual screening models that are really, really promising in terms of driving down false positive hits. But I think really exciting where you do have a false positive hit and you need an operator to go in and investigate and work out if it is a true hit or not. Exploring generative AI to help, speed up that investigation process is really a promising area, and is to be able to reduce that friction. The other thing as well, in the cross-border payment space, I think everyone here would be very familiar. Payment repair comes up a lot. Even though it doesn't happen on many payments, it's often the ones that do that cause so much noise within our organizations. And so it's really important that, we think about, as much as possible, validation of payment information at the channel. We don't have as much control over what comes to us via SWIFT other than the basic validations. But being able to work with, your digital teams and your clients to ensure that the right information is in the right place in the payment before it's initiated is really important to help drive down that repair, and we can move transactions cross-border much faster. The other thing as well is it may be an STP payment all throughout the correspondent banking space, but then it gets to the beneficiary bank and all of a sudden it can't be credited to the beneficiary because the account's closed or the name doesn't match or whatever. And so, pre-validation services, HSBC was one of the early adopters of the SWIFT pre-validation initiative. But there are increasingly, more and more use cases for validation of payment, validation of payee, confirmation of payee, and upfront beneficiary validation as well, which is going to help that. I won't go into liquidity space because Anupam obviously covered that, but the other thing as well is fraud checks. As payments move faster, that means they can get to bad actors much quicker, and fraud models and detection often has to be updated faster and faster as new schemes are taking place and different client segments are being exploited, and that often comes the speed at which those need to be updated comes at the expense of client experience and payment speed. And I think the increasing adoption of AI in fraud detection is going to help drive down that sort of same thing that we see in the screening space, the false positives for fraud. And hopefully be able to detect it a lot more effectively. But I think all of this is really going to be reliant on the next topic, which is structured data, and ensuring that the right information in the right place to help payments move quicker. That's what I'm also really excited about in this space.
Yeah, thank you, Tom. And I mean, it's a good segue, right? Speed is only one part of the equation, but to be able to make global cross-border payments move at scale, we also need good data. So with that topic, I'll stick with you, Tom.
Perfect segue, thank you. So I think, obviously everyone in the room has been touched by ISO 20022 in one way, shape or form. It's the most transformative innovation within the correspondent banking space in more than a generation. So moving from the legacy MT message format, which is sort of like free format, limited by characters, limited by length, into this MX standard that provides us with a lot more information in the payment, a lot more contextual data in specific parts of the payment. So parties, information around what the payment's for. All of these sort of things are really what's going to drive the transformation, not only in payment processing speed, but being able to deliver a lot more value to the banks themselves, but also to our clients. The other thing that ISO 20022 is, I think, transforming is our technology infrastructures within banks. So anyone who's gone through the migration and you're trying to still use legacy payment processing applications, you'd obviously know the challenges that come with the translation of the MX message into your legacy payment processing engines and then having to spit it back out for onward processing. You would be familiar though with orchestration layers or translation layers that sit on top of those. That's like sort of the first step of the payments transformation that needs to occur to really get the most benefit out of the ISO 20022 migration and move it away from a compliance migration to truly a value-added service that we can provide within ourselves and to our clients. But in terms of practical benefits that we're already seeing, HSBC has gone live in I think over 20 RTGS markets, plus we've obviously gone through the MT to MX coexistence that ended last year. Over those 3 years, we've seen our non-STP rates decrease by about 25%, despite the fact that we have all of this noise with each migration. So we're already seeing the benefits of increased STP rates. The other thing as well is being able to have that structured data in the right place in the payment message is helping us with sanction screening as well. We see less false positives because we're able to say, okay, if we see a word in a party field, it's very different to a word in remittance information, as an example. So that's what we're already seeing in terms of the benefits of ISO, and really excited for what the future holds for the structured data part of it as well.
Yeah, thanks, Tom. And I mean, it's kind of also feeds into a little bit what we talked about earlier, right? When you have good data, when you have good data in a structured way, when you have it richer, that's all the more you can speed up things, leveraging things like AI, right? So super important. It'll be interesting to see where this goes even more expediently in the future, right? So, Michael, I'm going to move to you and ask about the structured and hybrid address, not least of which because the unstructured is being demised in November of this year. So I'm sure all of you are very well aware of this, but if you're not, public service alert, November this year. So, Michael, why now is this such a hot topic?
Yeah, and so Tom mentioned already, right? ISO, it's all about structured data on a micro level, the one we're really focused on now, right? This year is finally, right, as Joanne mentioned, that we're getting rid of unstructured address data. Now, this is nothing new. We've tried this many times before, as we all remember. We've been around, right? Even in the MT world, we've tried the F option and so forth to implement that. And we've always been struggling with this. We've always got pushback. And now I think with the help of, obviously, right, G20 initiative, FATF and the likes, right, of pushing really forward, right, with structured address data, this really, really helps. But there's a bridge solution, which we call the hybrid address. So at a minimum, right, you got to make sure you get the country code as well as the town name right, even if other components are not structured. But it's not just from a compliance perspective, but I think all the structured data is or address data is really critical for the whole fraud monitoring, right? Mm-hmm. So if the obviously sanction AML, but also the fraud that we just talked about will be critical in order to match anything and do the pattern matching, right? To speed those up and make it more meaningful, having sort of the country, town, postal code data, right, will be very critical in that space. We fully appreciate that, obviously, from an industry perspective, that this is not an easy lift, right? And everybody has been working hard on it, and you probably, all of you discover new data sources or new address repositories in your own organization that need to be addressed, right, and migrated, right, to the new structured or at least hybrid data. So I think that's very, very important, and appreciate everybody's attention to it. A lot of channel work, right, will also need to happen, right? Because ideally, want to not also right from the initiation want to capture these issues, so don't really get into your backend system causing repairs, right? But it's not an easy lift, as I said, right? So reference data will be important to clean that up. And just this morning, actually, right? Just practical. I mean, the discussion has already improved in the industry. Instead of, do I really need to do this, right? This morning early, right? Already discussion on, okay, if you think about Hong Kong, right? Is sort of the town name central and the country Hong Kong, or is it both Hong Kong, right? So people are really getting down to the weeds on this. That's good to see, and progress is being made, right? So keep up the good work.
So thank you, Michael. So that was a bit about kind of traditional and improving traditional, and thinking about a little bit more forward. Improving existing rails, of course, is one path, but we see now emergence of new forms of money. And so let's turn to a discussion on tokenized deposits and stablecoin. And so, Tom, I'll come to you. What role do you see for stablecoins, tokenized deposits, and interoperability play in the future of cross-border payments? And where do you see the strongest practical relevance today?
Sure. So I think I would call that tokenized deposits as I think the most practical real-world example of how we can use digital assets and newer technology to be able to deliver value to clients. So tokenized deposits is basically a digital representation of money that is at a bank account. It's within the banking infrastructure. It's trusted. It has prudential regulation. It's regulated. And so I think immediately banks and their customers can get very comfortable with that concept. We're seeing it at HSBC already delivering value to some of our clients who operate with us all around the world. So we launched tokenized deposits last year in the UK, Singapore, Luxembourg, and Hong Kong. And we just launched in the US as well. And our corporate clients are using it to move liquidity from one location to the next in real time without having to have any delay or risk settlement or introduce settlement risk. So I think this is a tangible application of the technology, and one that we've seen a huge amount of interest in, because it does allow our clients to be able to use their funds wherever they want it around the world without having to worry about cutoff times and that sort of thing. That said, though, it's still fully integrated into the fiat payment system. So you do need to wait for the local clearing scene to be back online to be able to make payments outside of banks. Stablecoins, really interesting area. Obviously, there's a lot of focus on that, a lot of developing regulation in many markets around the world. It is, I would say, there is a lot of interest in it from our corporate clients, but it's still responsible for, less than 1% of total B2B and remittances around the world. And I think the reason for that is because, there is still sort of a use case and a question around adoption that the industry is still working through to be able to sort of move it from, a niche digital, currency concept into the broader financial services. But it's growing every day. So HSBC in Hong Kong was just issued a stablecoin license. Primarily we can see it having a retail banking application, but you can also see it expanding to being able to enable cross-border flows, within the Asia market as well. So I think really interesting space. The big question though is interoperability. How do you move digital assets between financial institutions? There's many different things going on in the industry on that. Individual bank consortiums are looking at it. There are other providers out there that are looking to build these networks. The problem is though, the more you explore into these things, the more there's the opportunity for fragmentation and the lack of interoperability. One thing that I really like is the Swift Ledger initiative. So this is using the Swift network to be able to help move digital assets across different ledgers and proprietary blockchain systems. But the big question is, how do you address the interbank settlement? The Nostro Vostro network still has to sort of apply in the absence of something more centralized. But I think in terms of interoperability, it's going to be completely key for these new digital assets, digital currencies, to be able to be moved between financial institutions, not just within them.
No, that's fantastic. Thank you, Tom. And I'm going to try to speed us up a little bit so that we can hopefully get to some of the great questions we see. So, Anupa, maybe you can comment as well on, on what Tom said, and then talk a little bit about programmability and maybe a practical use case of programmability in cross-border payments.
Sure, John. In fact, I'll agree with the point, Tom, you've been making around, tokens and the use of tokens. What we're seeing at Citi is very quickly the interest that a number of our clients had is now converted into the actual usage of tokens. We've launched what we call Citi Token Services, and we're leveraging one of our biggest challenges. If you look at the cross-border payment, it's the fragmentation and trying to connect two clearing infrastructures in two time zones, but also the liquidity pools that are sitting in two different locations. So with Citi Token Services using smart contract and leveraging blockchain, we've created liquidity pools. So as money goes from, a dollar goes from New York to Singapore, even if the clearing house is shut here, CHIPS and FedWire is shut, real time the money goes into the beneficiary's account at Citi in Singapore. Now the challenge, Tom, you're talking about, obviously, while it's within the Citi network and it's working fine, it's real 24/7, and our clients don't need to, by the way, burn or mint coins or leverage the blockchain technology. We're doing it on their behalf. The challenge still remains as the money goes out of the network from Citi's perspective. So we're seeing more and more, and in fact, US is a good example where there's a lot of discussion at a clearing level in terms of creating interoperability. You obviously need two hands to clap here, and until the time we create that interoperability where Citi can talk to HSBC and our tokens can at some point get burned and minted into a HSBC token, till we see that, we would not see a significant amount of adoption in the industry. At Citi, we are seeing, some of the early use cases are, obviously, we deal with large corporates. We're seeing intercompany transfers. So, a very large corporate moving treasury flows from their account in New York to Singapore, or vice versa, or moving money from London to Hong Kong, etc. That's been our biggest use case that we're seeing. Obviously, we are also seeing use from a person to person or business to consumer perspective. We're seeing with some of the partnerships we've done, off ramp, on ramp, and I would say, while obviously it's still a very small portion of percentage terms, a small portion of the total money that's moving around, the rapid pace with which it's grown, at least within Citi, we're seeing hundreds of billions of dollars moving around. We would expect the space to significantly evolve with some of the changes that are happening around us in the industry. If I look at programmable money, to the point, Joanne, you're making, we've seen some use cases predominantly from a trade perspective and trade flow standpoint, but a payment originating out of, for example, a ship entering a particular port, and then that action triggers a payment that happens, and all of that can be programmed very, very easily using blockchain and using the token infrastructure.
Oh, thank you. Appreciate that. And maybe really quickly, and then I'm going to go to some of the questions from the audience. Michael, what do you think? I mean, we heard about some of the use cases for programmable money, the tokenized deposits. It seems like we still have a little ways to go, maybe from an interoperability perspective. What do you think needs to happen to be able to scale these types of solutions from a cross-border payments perspective?
Well, the main obstacle, I'm going to be really quick, right, was always sort of regulatory clarity. So at least for the US dollar with the Genius Act, we heard about it before, I think we're getting there, right? Now, obviously, there's a lot of interpretation and rules need to be written around this, granted, right? But I think now we know what sort of direction of travel is, and we've seen now a lot of activity, right, as Anupam explained, in the industry around that. So the next big challenge, I think, is really amongst the interoperability, but really coming from dollar perspective, creating that settlement interoperability amongst the different players. And I think here is sort of the market infrastructures in the US, chips and Fed and DTC and others maybe will play a big role, right? Looking really, how can we do that? Because it's our function, right, as market infrastructure, to be the glue in the middle, right, between the different banks. There's a lot of activity happening in this space, and you'll probably hear a lot about this in the near future.
Oh, thank you. So I want to give a little bit of time for audience questions because we have a lot of really interesting ones up here. So maybe we start with, do you see North American banks embracing wallet infrastructures and eventual ISO 20022 messaging applications to support cross-border payments to wallets and addressing the hybrid address? Anyone want to grab that?
At HSBC, we have a product called Global Disbursements, and we are able to take our clients' payment instructions and settle it through wires, real-time payments, ACH networks, but also wallets as well. So we can make payments into PayPal accounts and domestic wallets that exist in markets all around the world. So, yes, I do think it is something that can be embraced. The challenge always, though, is whenever you're taking a payment message from one location and you're trying to get it into another, there is the conversion that needs to occur. But the conversions of different payment schemes and wallets being able to take a Paxo 8 message and ensure that as much as possible the standards are the same, I think will only allow that to continue to grow and develop.
Yeah, I'll
really quick on, because it was also ISO 2020 focused. So next year, right, we do another message upgrade, right, FYI, to the next version of ISO. And that one actually we had it always in ISO messages, right? It's the idea of proxy information around accounts, but it always had to be in addition to the account number, right? But in the next release of the ISO messages, it can be either or, which should then be easier to address any wallet or any complex digital address you want to have, or an email address, doesn't matter, fully in these messages. But, I mean, having it in the message is one thing, processing it consistently across the globe is another. But at least from a standards perspective, next year, I think we'll be there to really make that, at least from an addressing perspective, seamless.
Yeah, I agree. And, on that point, Michael and Tom, what I'll say is, ISO has been adopted. Now we know that language, we speak that language as banks, and FedWire was a big way of getting all of us to do that. Making the most of ISO, making sure that our clients' recon is fully automated, the cash application is fully automated. I see a lot of use cases emerging out of the use of ISO and that standard messaging. Going back to the other question, Tom, that you responded to, are North American banks embracing wallet infrastructure? I would say absolutely. Banks do what our clients tell us to do, otherwise we lose the relevance of doing business. There's a significant adoption of wallets across the globe. This has started pre the instant payment journey, and things will evolve as instant payment or RTP networks are taking shape or taking a huge amount of flows, and as digital assets become a reality. But we are seeing a significant amount of adoption of North American clients. In fact, we're working with a number of our bank clients, similar to the global disbursement, Tom, you were talking about. Our Whirling capability has access to wallets across the globe, and huge amount of adoption there.
Yeah,
Yes.
thank you for that perspective. And maybe we'll take one more before we wrap up. So how do we as an industry solve the last mile settlement challenge, given the correspondent banks deliver payments quicker to the beneficiary bank while facing local market challenges and requirements?
I think I can go first. I think that's what the whole the blockchain technology and the digital assets are solving for. But I think with a number of the clearing houses going 24/7 and the clearing infrastructure available to move treasury flows and commercial flows, I think that'll go a long way in terms of solving that problem.
Yeah, I think today through GPI, we can see that a huge amount of transactions that go through the SWIFT network get to the beneficiary bank in under 30 minutes, right? So it is very fast. Like, there was another question around, are we going to move away from the SWIFT network because it's too slow? SWIFT is not slow. It's the bank's ability to apply the payments to their beneficiaries, which is where we see the slowdown, and that varies by, I guess, how regulated the market is. There might be currency controls or need for documentation checks as well. I think as Anupam said, being able to include much more information in the payment message, much more contextual information around what the payment's for, is really key to being able to get the speed up of processing to the beneficiary and meet some of the G20 goals. So I mean, for me, that's a big part of it. And as I said before as well, being able to capture as much information at the channel and being able to work with your customer to be able to ensure that all the information's there and be able to deliver that to the beneficiary bank is really going to help with that last mile settlement.
Right, and you push a little bit, I mean, like many things we do, right? In digital commerce, a lot of the work is then pushed to the point of origination, right? Just think about when you book travel. If you don't have all the information, it can take a long time, right? Until finally you get your ticket. And same thing here, right? If there are local requirements on documentation needs to be provided, attached, reference numbers, correct. Now they're sort of you find this out during execution, there's a delay, right? But if you can, through pre-validation, push this all the way up front, then obviously, well, the message wouldn't even come into the payment system before all these friction points have been resolved, which might take still 2 weeks, by the way, right? Before then the payment comes into the banking system. But once it's fully pre-vetted, pre-cleared almost, right? Then obviously it should go, right? Straight through to the beneficiary.
All right, 30 seconds or less. What is the biggest unlock to make cross-border payments seamless by 2030? And we'll start with you.
I think and it's pretty much the summary of what we are saying. The whole infrastructure is available to move at speed, which is one of the 4 pillars. And all the banks along with the clearing infrastructure will need to make that happen.
For me, surprise, structured data, love it. But also the payments technology transformation as well, I think is going to be really key for banks to be able to provide faster cross-border payments.
Well, a little bit more regulatory alignment in some of these areas, right? Because once we have all the data and the harmonization, we still depend, right? Or local, right? Execution eventually depends on certain regulations to be sort of clearly understood, right? And harmonized.
Yeah, no, thank you. So as you can see from our discussion today, there's not just one thing shaping cross-border payments, but many things. So everything, everywhere, all at once. Many things happening, whether it's tokenized deposits, faster payments, always on expectations from our clients, ISO 20022, fintech changing the way that our clients perceive us doing business. There's so many changes happening that are informing, and please consider all of these things we talked about today when you think about your product strategy, when you think about how you're commercializing and how you are dealing with your clients, because these are all super important things that are going to shape the future. So with that, I want to thank very much my panelists for sharing their enlightened and expert opinions with us today. And we made it on time, guys. Thank you.